Well, thank you for joining us today. I'm Marlon Bowling with you, and always a pleasure to visit with you about our markets. I hope you're having a good Friday so far, and I hope it gets even better as we go and head toward the weekend here. We want to recap last night's trade and take a look at our quotes for the setup for today's market. Now, Suzanne alluded to this a little bit ago, but let's go to the big board and run through these prices with you here. Let's go to the corn, and on the quotes provided by bar chart here today, we have December now 2 1/4 higher. We're at 481 1/2, and you have the March 2 higher at 495 1/4. That one would be 1.5 off of its earlier high from last night. So a little bit of strength in the corn, a little bit, not much. Soybeans, well, different story here. Look at this. November, 14 1/4 higher. We're at 1293 3/4. Of course, keep in mind, November goes into first notice day here before too long. It will at the end of the month. January is 14 1/4 higher as well, though, at 1314 1/2, about 3 cents off of its overnight high. Now let's take a look at wheat, and in Chicago, December is 2 1/4 lower at 577 1/4. Goodness sakes, where is the bottom in this wheat market here? Kansas City, you have December down 4 1/2 at 650 1/4. It just seems like it's carving out new contract lows as it goes every day. Spring wheat, you have December down 1.5 at 722 3/4. And in the cotton market this morning, right now you have December trading just 8 points higher at 84.67. And of course, we have to keep an eye on the outside markets nowadays with everything going on. And there goes West Texas crude again today. December futures now up $1.06 at 84.27, and even that has cooled off over $1 from its earlier high this morning. There for a while, it was over $2 higher and really surging ahead. Now, the U.S. dollar index value today has December down 107 points. It's still way over 106 at 106.315. And for those of you that watch the Dow, it is up 16 points. But it's still at 32,892, so well under 33,000 yet. I want to bring in Brian Hoops, and he's the president of Midwest Market Solutions. Get his analysis on what the trade is trying to tell us. And Brian, thanks for joining us. Now, as I came down to the studio, I did not see any overnight export sales reported today. Did you?
No, good morning, Marlon. There wasn't any sales this morning. So, we had a couple days of soybean sales, and not to say that we couldn't have some Monday, Tuesday of next week, but you just don't know how big that purchase agreement that the U.S. and China signed on Tuesday. It didn't have any specifics of how much beans China was purchasing. So they've made some token purchases here the last couple of days, nothing this morning. Markets are focused on kind of what's happening overseas with, as you mentioned, crude oil sharply higher. The U.S. is launching some strikes against Iranian areas in Syria, I believe. So things are kind of escalating in that front. That's a supportive feature, I think, for, kind of as a spillover feature for corn and soybeans. We're closely watching what's going on with weather in South America, especially in northern Brazil, where it's been very dry. Now, they did receive some rains this week, and going forward, the models are in disagreement about how much rains will fall in November when things are starting to get more critical as more of the crop gets seeded. But southern Brazil, it's extremely wet, and maybe there's a little bit of concerns about being too wet at this time. So it's never a perfect growing season, even in South America, and that's what we're seeing so far here at the end of October.
What about the weather impact here in the U.S. for U.S. fall harvest?
Yeah, there's a front moving in out of the Montana area across Wyoming down into Nebraska and the Dakotas here this weekend. It could slow down, certainly disrupt some harvests. We've seen some reports on Twitter and from clients that, they've got a little bit of crop out in the field yet. They're getting some snow on it. So it's a little bit early, not unprecedented to have Halloween snows. It has happened in the past. The crop's always gotten harvested, but it does slow things down for a lot of producers, especially if they want to do some fall field work after getting the crop harvested.
Is that putting extra pressure on the wheat?
Well, yeah, the wheat market's kind of its own animal right now. The moisture that's moving through the plains here is really beneficial for that winter wheat crop this week. And so we saw Kansas City fresh contract lows, whereas Chicago, Minneapolis have not fallen like the Kansas City has. We've been mentioning in our talks here for several weeks now that the wheat market, now that winter wheat harvest was over and the spring wheat harvest was over, its job is to find that price level that'll stimulate demand. And we just have not found that price level yet. There was a couple token purchases of Chinese wheat in the last couple weeks, but our export sales yesterday were like a 4-week low. We're just not moving wheat. And so we either have to drop low enough to find that price level that'll stimulate export demand, or we have to move it into the feed rations to try and move some of these stocks that we have. And so when you're talking about competing against corn below $5, the wheat market's still overpriced in that respect. And I'm afraid that we are going to continue to struggle in this wheat market until we can get some sort of a fundamental reason to justify a big short covering rally by the funds.
Okay, Brian, let's put on our thinking cap. I'll see if we can stump the panel, and we'll talk about livestock when we come back right after this break. We are back, and we are talking with Brian Hoops of Midwest Market Solutions. Brian, the livestock trade has been an adventure, let's say, to say the least, for the last week and a half now. It's not for the timid, that's for sure. I know you follow technical signals and that sort of thing when it comes to the markets here, but where are we right now when you look at the cattle? We've had that huge drop that we've had here the last week and a half, but has it taken out the really, really long-term support yet or not?
Unfortunately, it has. In a lot of the contracts, we have gone from an overbought bullish scenario where we were sharply above the cash, sharply above the index, to now feeder cattle well below the current index, live cattle with October going off the board next week. You see December there trading well below the current cash markets. And so that creates a situation where we should find support and should start to rally. There's been some bids at 181 early in the week in the Southern Plains, and those were pretty much passed. There was a little bit of trade, just a handful. But this morning we're seeing 183 bids again being renewed, same as yesterday, and some passing of those bids. So we're seeing a little strength here in the cash markets. And so you talk about December futures there at 179. We're trading $4 or $5 discount to the cash. So unless the cash keeps coming down, the futures are extremely oversold and due for a bounce. And they could easily get back up to that gap area that we left after the cattle and feed report on Monday morning. So it's been an ugly week, no doubt about it. I think it may be coming to an end of the fund selling. Certainly, if we start taking out lows from this week, there's going to be sell stops, all kinds of them underneath it. So it could turn ugly once again if if the funds step in and start selling and those stops get triggered below this week's lows.
Wow. Okay. I'm glad you pointed that out. Now let's revisit where we closed yesterday, just for kind of a starting point for today's trade. We did have December live cattle under a little bit of pressure yesterday. It was down a dime on the close, but February, keep an eye on that. It was down $1.10 at 180.40 yesterday. On the feeders, we closed up with the November down $1.55. January was down $1.47 at 235.07. All the months were over $1 weaker in the feeders yesterday. Lean hog trade, they were higher, led by the nearbys. In December was up $1.12 and it finished at 68.62. February was up $1.12. So that's how we finished yesterday. Hey, Brian, thanks for shedding some light on the markets for today. I appreciate all that. And Brian Hoops is with Midwest Market Solutions. And yes, indeed, have a good weekend right back at you.